Hello everybody, this is Lara with your weekly video for gold for the week ending Friday 11th of November 2022. Gold is moving strongly higher exactly as both Elliott wave counts have expected. I am expecting resistance in the first instance at 1827.65. Thereafter, when this bounce is complete, I'll expect the bear market to resume. The first target at cycle degree is 1037 and the final target many years away is 657. Bearish wave count first, bullish wave count next, and then classic technical analysis. For a very long time this has been my main wave count. It expects that the bull market ended here and the bear market, a new bear market to be labelled supercycle C, began up here. Supercycle C may only subdivide as a 5-wave motive structure. We need to fit this into the bigger picture, and I covered monthly charts for you last week. If you're new here, click through in the link at the top of every analysis every week. I link back to where I look at monthly charts. Grand Supercycle 4 is a huge expanded flat correction, and within the expanded flat, here's the end of wave B and the start of wave C. Supercycle C would be extremely likely to move beyond the end of Supercycle A, which was the December 2015 low at 1046, I think 1047. The target would see it achieve that. It would be extremely likely to move below that point to avoid a truncation and a very rare running flat. A common Fibonacci ratio between an expanded flat is for C to reach 1.618 the length of A, hence the target at 657. Supercycle C must subdivide as a 5-wave motive structure. There are only two 5-wave motive structures, impulses or diagonals. If supercycle C was an ending diagonal, then all of the subwaves at cycle degree must subdivide as zigzags. So if I have cycle 1 correctly labelled as a diagonal, it's not a zigzag. We can eliminate an ending diagonal for supercycle C. The more likely and more common structure is an impulse. Within an impulse, wave 1 must be a 5-wave motive structure, and here it could be a leading expanding diagonal, 1, 2, 3, 4, 5. Following a leading diagonal in a first wave position, the following second wave correction is commonly very deep. This fits normal behaviour following a leading diagonal. Cycle 2 is a very deep correction of cycle 1 and it subdivides as a zigzag, which is the most common structure for a second wave. Cycle 3 must subdivide as an impulse. Within it, primary wave 1 may be complete, primary 2 continuing higher as an expanded flat. When it's over, we'll expect 3, 4, 5 down to the target for cycle 3 for it to reach 2.618 the length of cycle 1 at 1037. That's the Fibonacci ratio I'm using for this target, considering the depth of cycle wave 2. Primary 2 unfolding as an expanded flat. This is a common Elliott wave structure. Here is an example at a lower degree. Intermediate 2 is an expanded flat, A, B, C. B moves beyond the start of A, and then C moves beyond the end of A. So primary 2, A, B, C. B has moved beyond the start of A. We'll expect C to move beyond the end of A. The probability, if this wave count is correct, if this is an expanded flat, the probability of a new high above the end of A is extremely high to avoid a truncation and a very rare running flat. And the very few running flats I have seen over the years have a B wave that moves only a little bit beyond the start of A, and this one has moved substantially beyond the start of A. Intermediate C must subdivide as a 5-wave structure. Let's take a look at it, how it's beginning at the daily chart level, this low down here, labelled intermediate B, this point down here. Intermediate C must subdivide as a 5-wave motive structure. Minor 1 and 2 may be complete. Minor 3 is showing strength. MACD supports this wave count. The third wave is showing an increase in upward momentum and range. A target for minor 3 is for it to reach 1.618 the length of minor 1 at 1798. When minor 3 is complete, a pullback or consolidation for minor 4 may not move into minor wave 1 price territory below 1727.76. The final target for intermediate C at this point is the 0.382 Fibonacci ratio of primary wave 1 at 1827.65. When I have minor waves 3 and 4 within intermediate C complete and I know where the fifth wave starts, then I can add to the target calculation at another degree. It may widen to a zone or it may change. The idea as we get toward the end of the structure is to use as many degrees as possible to narrow in on a target with the highest probability. So that's why targets will change as we get toward the end of a structure. At the weekly chart level, this is a bullish alternate, or it's a bullish wave count, not an alternate, but I've judged it for a while now to have a lower probability. This bullish wave count considers the bear market over in December 2015 as the end of a grand supercycle degree wave, but it was over in just 4.25 years. It's just way too brief. Even a corrective structure within gold tends to be more brief than its bullish movements, but that is just too brief to have reasonable probability. There are a few other problems with this wave count, which mean in Elliott wave terms its probability is judged to be lower. But a lot of you for a long time have been very bullish, and so you wanted a bullish wave count. This is the best that I can come up with. It is possible, it meets Elliott wave rules. It's just judged to have a lower probability. If the fourth wave is over here, the fifth wave should have begun. The third wave at cycle degree was a long extension. If the fifth wave were to reach only equality in length with the first wave, it would be truncated. So it looks like the fifth wave for this bullish count may be equal or reasonably equal in length with the third. They may both be extended, hence the target at 2576. Let's take a look at this at the daily chart level. The slowdown here for cycle 4, this point down here. I will label intermediate wave 1 for this new bullish trend as incomplete, with minor waves 1, 2, 3, 4, 5 to complete. When intermediate 1 is complete, then intermediate 2 should be a multi-week consolidation or pullback, which may not move beyond the start of 1. But for now, while intermediate 1 is incomplete, minor 4 may not move into minor 1 price territory below 1727.76. And the alternate ideas were invalidated this week. At the weekly chart level, a strong upward week has strong push from volume and a weak bullish signal from on-balance volume all suggests overall more upward movement. Look for next strong resistance, some quite a long way above at 1915. There's further resistance a little more close by. At the daily chart level at 1795. So after we get to that, stronger resistance above at 1915. ADX is declining, there's no clear trend at the weekly chart level. RSI, money flow and stochastics all neutral. ATR showing a little bit of an increase as price moves higher, but at the daily chart level an upward trend is indicated at this time frame, and on-balance volume gave a bullish signal. Price is moving strongly higher with a strong increase in range, and overall an increase in volume is pushing price higher. For the short term, let's look for next resistance at 1795. At the daily chart level, RSI has just moved into overbought territory. It can reach more deeply overbought, and then I'd expect to see some bearish divergence before I expect this bull run to be over. For now, neither ADX is not extreme and RSI is only just overbought. Plenty of room to go above before this trend gets into danger territory. Money flow neutral, stochastics overbought, but when this market is trending, stochastics can remain overbought for quite a while. ATR showing an increase as price rises is good to see. There's support from volume and increased range in this upward movement, so I don't think it's over yet, and that fits both Elliott wave counts. That's all from me this week with your gold analysis. I hope everyone's looking forward to a great weekend.